The Frank G. Zarb School of Business and WRHU-FM Radio Hofstra University invite you inside the Z-Suite.
Hello, I'm Janet Lenaghan, Dean of the Frank G. Zarb School of Business at Hofstra University. Welcome to Inside the Z-Suite, where we explore timely topics and trends with leaders across industries. The accounting profession is changing rapidly. Firms are merging, private equity is playing a larger role, and traditional ideas about firm structure and ownership are evolving. To help us understand where the profession is headed, I'm joined by Bob Mayer, Partner Emeritus of Prager Metis and an emeritus member of the Zarb School of Business Accounting Department Advisory Board. With more than 40 years in the profession, Bob brings a valuable perspective on how these changes are reshaping accounting. Bob, welcome to Inside the Z-Suite. It's so great to have you with us today.
Thanks, Janet. I'm glad that I'm able to participate in the Z-Suite program.
We're really lucky to have you because this is such an interesting topic, and your expertise will really help our listeners better understand the new trends in accounting structure and how private equity is playing a role in that. Before we even begin to dive into that, you have spent more than 4 decades in accounting. How does the profession today really compare to when you first started? What are some of the important changes you've seen, especially around firm structure?
So when I started out, most accounting firms were traditional, locally focused partnerships with clear, linear career paths and organic growth. Today, firm structures are far more varied. Consolidation, mergers, and private equity have reshaped the profession, creating larger platforms and alternative ownership models. Firms are now run more like sophisticated businesses, with formal governance and a stronger focus on scale, technology, and succession. While the core values haven't changed, the way firms are built and managed certainly was.
You mentioned consolidation. Maybe we'll start there. I think the latest one that I had heard about is Baker Tilly and Moss Adams. They've combined, I think the kind of strategy around that was that they were hoping to scale advisory capacity. What else drives these mergers?
Private equity is part of it, but firms have also realized that merging with the right firm benefits both parties. They're both able to create additional resources and further growth opportunities together. Basically, when I merged my firm, there wasn't any cash transpiring between the parties. It was just basically equity for equity. And today, CPAs that are looking to merge their firms, they want cash and they'll take some equity.
You just said equity for equity versus cash. Can you explain a little bit more about the difference between those two?
When I merged my firm, basically, I owned it with 4 partners. 2 of them had equity. 2 of them were non-equity partners. When we merged into Prager Metis, 2 of us became partners in their partner structure. We were the 23rd and 24th partner in the firm. We didn't see any cash. We signed an agreement to merge. We notified our clients, and we basically continued the same way we continued as Mayer CPAs, but we were helping to build a bigger accounting firm. So we came in with 21 other partners, and when I retired, we had 100 partners and principals. Some of it by internal growth, but a lot of it through mergers and acquisitions.
Wow, that's a significant growth. That's pretty amazing. So that's mergers. How is private equity factoring into the profession now?
The timing for them was right. There was tremendous opportunity to divest in firms. Okay, the reason they would look to accounting firms and never looked before is the changing professional independence requirements, etc. They were changing throughout the United States. Their model that they were looking for is when they look to acquire or set up something, they want to make sure there's recurring revenue. And in accounting practice, there is recurring revenue. There's usually with a good firm, the clients are retained for many years. The relationship that's built between the partners and the owners of the businesses really is what made PE interested. Of course, it gave them also a big opportunity because today PE came in with a lot of money. And before, basically, the partnerships went out, they borrowed money, sometimes to carry busy season. Then by the end of the year, they probably would pay back the debt. Today, under private equity, there's hundreds of millions of dollars that are made available that can be used for acquisition. During that acquisition, that's where now the partners in a CPA firm, they want to walk away with some of their money. And they're willing to take a bet if they believe in themselves in the future by having a partial ownership in the continuing firm.
You know, it's so interesting. I mean, because you talk about, so PE is attracted to the accounting firms for recurring revenue for sure. Obviously, they're in it because they're expecting a certain amount of returns. Does that create pressure around the advisory firm versus the accounting firm? Like, are the lines starting to blur? And what are the concerns that folks have around PE driving accounting firms now?
I think your clients will see enhanced service because your firm's relationship should remain the same since the clients are the same. The only difference is that through private equity, you would acquire not just accounting firms, but other financial resource firms. And one of them that is very important in this economy today is advisory firms. Each accounting firm will have maybe a small advisory practice. There have started to be, over the last couple of years, firms that are purely advisory firms. They don't do the day-to-day accounting. With AI, I believe that the day-to-day accounting is going to change. Basically, the opportunity for staff and partners to grow will be because of the ability to provide advisory services.
So you mentioned AI, and I'd be remiss if I didn't dig in a little deeper with you on that. I know you said day-to-day accounting is going to change because of AI, and obviously it's changing every profession. How do you imagine it changing the day-to-day functions of an accountant?
Somebody needs to produce books and records. There still will be tax returns. But I believe that a lot of those functions have already been provided through AI. The question becomes that you have to make an investment in your firm to keep up with AI. And basically, how do you do that? You have to really look at how your practice operates. Your goal is not really to eliminate people, but to make them more effective and more efficient. And at the same time, provide added services that are very hard to provide when you're providing those day-to-day activities. So the idea would be, again, to reach out to your existing clients, provide them with a level of service that you probably are providing, but not at the same degree and expertise that you'd have now available because you're growing your firm. I think that, as Prager Metis, I think we'd be very happy to merge in a firm that is in the advisory space and add it to our existing firm. At the same time, there's other areas that we would be looking at. We've always had separate entities that provided tech services. There would be greater opportunities to be seeking out firms either of equal or maybe a little bit lesser volume than we're doing, but in areas that currently we may not be providing those services, we may be outsourcing them. They, through private equity, now if the funding would be available to be able to bring them in-house and bring them under the Prager Metis umbrella.
So that truly is a real benefit in terms of clients' perspective, that all of those services are available with their trusted partner. And as you pointed out, so many of the accounting firms have established long-term relationships with their clients. From a client's perspective, what are the key benefits and what are the concerns that they might have when their trusted accounting partner decides to take private equity money on?
Your clients will see enhanced service. Your firm relationship should remain the same with them. There will be more resources and services available to the client. As good as that partner is in assisting his client with growth, even for maybe him to be going public down the road, the larger the firm, a little bit the better the firm. I'm not even sure where the old sole practitioner is going to be in the environment because AI is going to cost money. Basically, that person would still be doing services similar to what they've been doing, where in a firm like Prager Metis, there's great opportunity for people to take on the advisory role.
That's such an important point. We talk a lot about how AI is going to transform the way we work. You're actually suggesting it's also going to transform the organizational structures in how people operate.
Well, I think everything is an evolution. Firms need to adjust and adapt to moving forward. From the client's perspective, what are their key benefits? The firm that merged or taken on private equity can offer more resources. They can offer these additional services that'll benefit the client when it's introduced to them.
Broadly speaking, we went from the big 8 to the big 4. I know you're saying one of the benefits of private equity and all of the mergers is that you're able to get larger firms that can offer a broader array of services to their clients. Do you imagine that the industry itself will have fewer numbers of players that are just much larger?
There will be less players. I think they will be larger, and I think they will be more rounded firms than exist today. I think they will include financial services, which will offer to clients insurance opportunities, better estate planning for themselves, things like that they're available today, but they'll be much more available on a larger scale because of the mergers that take place.
And so when you went through it, how did you maintain the organizational culture that was so unique to Prager Metis? What advice would you give to firms that are looking to keep scaling, looking to keep growing, perhaps taking on private equity money, but yet somehow want to make sure that their culture and the values that they've had created within the firm are sustained?
It creates so much more opportunity for accountants. They can focus on their area of expertise and create several unique growth paths. Advancements in technology and AI have created a stronger need for accountants to be advisors for the clients. And I think when we did the merger, we were looked at by many firms that extended opportunities, and we had to choose which one we thought was best for our staff and as well as the partners. We had youth, which unfortunately many of the firms that are doing mergers, they don't have youth. I had my son. I had a young partner, and she's worked for me since she started. I had 2 people from Hofstra that I developed. One of them today is a partner in charge of our HOA and condo audit practices, and the other one has taken on some of my client responsibility with smaller clients. I made that investment back then in having employees and staff that were looking to grow and wanted a career path. That gave us an advantage when we were looking to a merger opportunity. Many firms that are out there and are doing mergers, it's because they don't have that path. They don't have that person that they've developed or whatever, and they're all looking to retire. That's not going to work for PE. It's not going to work for any merger. You need to have continuity with the staff. You need to have the right client transition so that when that partner does retire, the staff right behind them that the client is familiar with. Otherwise, the client says, what do I need the firm to pick me my next partner? But if it's a smooth and organized transition, which Prager Metis has practiced for years, the retention of the clients, my retention of clients when I left the firm was 98%. That's a very high percentage. I had people that were behind me that I wasn't afraid to introduce them to the clients. They were appreciative of the opportunity that I felt I was giving them. They were not my relatives. I mean, yes, my relatives were involved in the practice, and yes, they are involved in Prager Metis today, but they worked to show that they could help to expand the firm's path. My son today is the chief operating officer of a firm that's 100 partners and over 500 staff. It's international with offices in England and in India. The size of the firm basically is partially the success of the opportunities that are put in front of you, but how you make them available to your staff as well as to your clients.
And it speaks to your leadership, really, and mentorship, that you recognize talent matters and being able to
I learned it all at Hofstra.
I love that, Bob. So For the Hofstra students who may be listening, and this is so important, or even young professionals who are out there now, the industry and the profession is just changing drastically. What are some advice that you can give them in terms of what skills should they be thinking about developing and competencies and even mindsets to allow them to navigate these changes and have a career as successful as you have?
I think that advisory is the mindset and skills that absolutely are critical in their career path. I believe that there's courses that have been added since my graduation in entrepreneurship. I think that's very important. I think that analytics is extremely important. My career was based on a lot of merger and acquisitions for clients. You don't wake up in the morning and all of a sudden you're great at doing merger and acquisitions. I think what you look for when you're in that position, and I was in that position when I was Chief Revenue Officer of Prager Metis, you look to what you're looking at as an acquisition target, and you look to see where you can make more money. How can you make the employees they have more efficient, more billable? That's what's important. And how can you make the investment in those people that are seeking the growth path for them to become a really good advisor to their client?
That's such great advice, Bob. And I could keep going and ask you a lot more questions, but we are at that time in the interview here at Inside the Z-Suite that we ask all of our guests some fun questions for you to answer off the top of your head. Are you ready?
Okay.
If you could trade places with anyone or anything, who or what would it be?
Elon Musk.
And why is that?
I'd like to have his money.
All right.
I'm actually very happy with who I am and what I've accomplished. When I said in 22, which was my agreement with the firm on the merger, that I would retire at December of turning 70, I was very happy to enjoy pickleball, enjoy lying in the sun, enjoying the water in front and in the back of me. You know, I couldn't have asked for a better situation. I have a great family. Those are the things that are important. The most important thing of all is health. I wish everybody good health. The rest should come along with it.
Amen to that. Okay, second question. What is your favorite household chore?
I'm not sure I do any.
I love it.
I don't know. Taking the car to the car wash.
What's important? A clean car matters. Do you have a least favorite chore? Or you just don't bother doing the ones you don't like?
The ones I don't like to do, I don't do.
Yeah, outsource like a good leader.
Yes, exactly.
All right, final question.
My wife tells me everybody else down here, the husbands, do the laundry. I says, that's good for them. I haven't done laundry in 52 years that we're married. I'm not starting now.
All right, Bob. Final question. And this really truly is for our students who are listening. What is the key to success?
Focus, 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 and hard work.
So true. Both take you far, and certainly that has carried you in your incredible career that you've had. Bob, thank you so much for joining us today and for sharing your insights on how mergers, private equity, and structural change are reshaping the accounting profession. Your perspective is truly a powerful reminder that accounting today is about far more than just reporting numbers. It's about strategy, growth, and helping organizations navigate an increasingly complex business environment. I also want to thank you for your great advice to our students and for all your support that you continue to give to the Zarb School of Business. We are truly proud to have you as one of our alumni. I want to also thank our show's producer, Adrian Stoller, and WRHU audio engineer, John Mullen, for their continued support. Be sure to tune in weekly on WRHU 88.7 FM at Hofstra University for new episodes of Inside the Z-Suite, or listen wherever you get your podcast. To learn more about this program and the Zarb School of Business, visit hofstra.edu/business. Until next time, I'm Janet Lenaghan from Inside the Z-Suite.